Hello traders, hope you're all doing great. Time now is around 5:55, and if you see the markets in yesterday's video only we were telling the markets are likely every gap up or gap down are likely to be filled, but I never expected this last gap up which we saw after the budget day would be filled today itself. So from 17,760 market, not 17,760. Let me see the chart. Uh, yeah, around 17,760 we came all the way down to 17,520, right? A drop of around 260, 240 points. So markets were kind of highly jittery, and Bank Nifty was performing, but Nifty was not performing, right? So if you see the Bank Nifty was kind of, it went all the way to 39,500 and ended in 38,800. So that is the thing of price action of Bank Nifty. It is always highly volatile, and that's why we don't encourage amateur traders to trade in Bank Nifty, right? So the main reason for today's sell-off is due to US market. If you know, US markets are really down, and as I talk to you, US markets are down. I think Dow future is down by 150 points, and even FTSE is not performing, right? So all these days European markets were performing excellently, and today US markets are not performing, and it's really in the red. So the main reason is because of today around 9 a.m. US time, US jobs report is going to be out, and many market participants anticipate that the number of people claiming for US jobs claim is going to increase, which means there are number of people who has lost their job on January. The main reason is because of Omicron variant of coronavirus. So in the December January month, Omicron was in the peak in Europe and even US countries. So many market participants anticipate that the number of people who are claiming for jobless claim, and or let me put it this way, number of people who have lost their job or number of people who don't have a job is significantly going to increase in January. That is the reason US markets are down, and you know, when US markets are down, we will also follow suit. So that's what is happening. That is the main reason why our markets have corrected sharply, but nothing to worry. We should resume our upward trajectory in maybe 1 or 2 days after this Omicron, US jobs report data is history. And many people talk about US Russia sorry, not US Russia, Ukraine Russia and China Taiwan, this thing and all, but I don't see any issue relating to that. So Russia Ukraine or China Taiwan is not going to be a it is not going to affect the market. So that's what I think. Russia is not going to attack Ukraine, or there is not going to be any war. So it's been very long time. Since last 7 or 8 months this is happening, and suddenly this media is bringing or highlighting these issues. So it's not a big problem. And even China Taiwan issue is not a new thing. It's been years now, maybe 5 years or 6 years it's been happening, and suddenly you don't bring that into this thing, and you don't have to disturb the market, right? So whatever happen is going to happen. We don't have to worry about that. So that's not a concern. Whether it is Russia Ukraine or China Taiwan issue is not a concern for the market now. So we'll focus on current issue, which is going to be US jobs report, which will be out, as I told you, which will be out by around 9:30 a.m. US time. And if we are maybe even on February, we are going to get a good numbers. So Omicron is it was having a surge in January. That's why market participants are in panic. Otherwise it's going to be a normal. So what I'm trying to say is, this is all a knee-jerk reaction. And when it comes to our market, what I can see is, if you see the open interest data, and I am sure today is expiry and whatever data today we are seeing will not be relevant, right? So if you see on the monthly chain, people have returned highest number of puts have been returned in 17,500. So today market has closed above 17,500. So we have closed up above 17,560. So that's a good positive sign. So maybe probably we may not go below 17,500. We don't know. We'll have to wait and see tomorrow. If we are getting positive global cues, we may rally on the upside, because today's whatever correction we had a very sharp correction, right? And on the upside, if you see 18,000 is having the highest calls. So 17,500 to 17,800. So we don't know today what is going to happen in the US market, and tomorrow what is going to be the scenario. If we are sustaining, if the US market doesn't fall much, or if we are getting any positive news when it comes to US jobs report, and maybe US markets can go in the green, then we may also go in the green, or we may also reverse. So this is just a knee-jerk reaction. We just don't have to worry about the this thing. And if you see the bank nifty, there is high there is yeah, the 39,500 is having the highest calls, which means it is going to act as a resistance. So people have returned 39,000 short straddle. In spite of weak premium, and India VIX today also it dropped by around 1.5%. And as I told you, US this is the monthly chart. 17,500. So if you see historically, 17,500 to 18,000 is the level to watch. If 17,500 is breached, then let's see how things pan out. And when it comes to bank nifty, 39,000 is having the highest open interest, right? And if you see, there is nothing much. And as I told you, US markets are trading in the red. That is the only news we have, and we don't have to worry about any other news. So nothing much to talk today. And today's sharp correction in Nifty, many people would have suffered because of low premium and falling India VIX. So that was a very bad scenario, right? So people would have found it hard to manage position due to low VIX. So whenever this sharp correction or big fall is happening on expiry day, I find it very stressful, because it is very hard to manage your position, right? So anyway, that's a market. What we can do, we'll see how things pan out on Friday, and hopefully market should recover and move on the upside. So nothing much. Thank you for watching. Take care. Bye.